All right. The markets are down close to around 20 points. The Nifty Bank, though, has moved into the green. So that's pretty good news. Well, good time to get in our Alpha Manager of the day, Srinivas Rao Ravuri, Chief Investment Officer at PGIM India Mutual Fund, who joins us on the show. Hi, Srinivas. Thanks so much for joining in. What a volatile week it has been. We've been moving to global tunes, but I wanted to put this question across to you. On the headline index, that's on the Nifty itself, given the kind of news flow we have, we are dealing with a potential Fed rate hike of at least maybe 25 to 50 basis points in the coming month. You have this uncertainty over Russia, also the LIC overhang. Putting all this together, how low can we go? What's the worst case scenario on the Nifty in terms of a correction?
Yeah, hi, thanks for having me here. So worst case scenario can be anything, Mangalam. We've seen market being extremely choppy, volatile in recent times. And add to the fact that markets are not attractive in terms of valuations. So we have one hand the headwinds, that some of them that you mentioned, in addition to the inflation, interest rate risk that we have. And earnings are supporting, but still, at current valuations, markets are definitely not cheap. I will not be surprised if we see, let's say, a 15-20% kind of a correction in a worst case scenario.
Oops. All right, Srinivas, I'm looking at your portfolio. It's interesting because at the one end of the spectrum, you do have some value bets, case in point, something like an ITC. But on the other, you have HUL as well. Then you have M&M, and then you have TVS Motors. So you have stocks from across the spectrum. Can you tell us a little about your thoughts in these spaces, autos, banks, and consumption in particular?
Yeah, sure. So let me tell you, where we are overweight, underweight, and then take you through what you're saying. So we are broadly positive on industrials, that's capital goods, healthcare, and IT. And we are underweight on consumer staples, we are underweight on financials, and we are underweight on chemicals. I think these are the broad areas where, we are positive and negative. Coming specific to autos, we are positive on autos. I think within that, there is definitely more traction in terms of demand when it comes to LCVs and HCVs. Passenger cars, we are somewhat neutral, whereas two-wheelers, we are clearly not so excited given the threat from the electrical vehicles. So finally, we are buying stocks. When you are looking at stocks, what is the risk reward in terms of, what is the earnings growth expected versus where are the stocks trading? And that is what will matter when we are buying a particular stock. So, and what the other thing that we keep in mind is what are the weightages in the respective benchmarks. So financials, if you see, I think that is the largest weight in the respective benchmarks. Within that, we are relatively positive on corporate banks and retail banks, but within financials there are two spectrums or three spectrum. One is a PSU banks, which are extremely value. Then you have the other private banks, and then you have some expensive financials. That is one thing that we are cautious or avoiding. Because when you're buying something at 5 times, 7 times price to book, I think the margin of safety is definitely much lower. So we are avoiding expensive stocks, and we follow the growth at reasonable price is what we follow as an investment philosophy at PGIM India Mutual Fund, and that's what we are doing across our portfolios.
Srinivas, afternoon. This is Rima here. In the financial space, one of your top bets is ICICI Bank. Now, the price action of ICICI Bank post-earnings has been very surprising. Now, before earnings, ICICI Bank was hovering around 800 rupees. The numbers turned out to be blockbuster. Everyone thought the stock would be off to the races. But since then, it's fallen to 750 rupees. But it's not that the rest of the financial pack has fallen so much. Take a look at Axis Bank. Also came out with numbers around the same time as ICICI Bank. Pre-earnings, Axis Bank was at 710, 720, but that has gone all the way to that 790 mark. So there has been a stark underperformance of ICICI Bank post versus an Axis Bank post numbers. What have you made of that? And you would be looking at ICICI Bank very closely, considering it's one of your top holdings. So what was the concern?
Rima, you know that we don't comment on specific stocks, but let me take this as an important analogy to look at markets. This is a very classic case, not just the stock that you mentioned, but overall, we have seen whenever analysts, the consensus is positive and unanimously positive, probably that is already built into price. So as a fund manager, our job is not just to look at what is the likely earnings growth, top line growth, of course, that we have to do in terms of what will happen over the next 1-2 years. What is equally important is how much of that is already priced in, how much of that is already discounted. So I think, some of the names that you mentioned, we have seen, let's say 40 analysts cover those companies and all 40 have buy rating. I think this is a classic sign. Whenever you have a unanimous view, the market tend to behave other way. I think earnings estimates is of course very, very important, but what is equally important is to evaluate, assess what is already priced in and what are we paying for that. So I think that explains, Rima.
Srinivas, I want you to elaborate more on your call on the auto pack, because you've got a CV player in there, that's Ashok Leyland. You've got a two-wheeler maker as well, TVS Motors, and quite a few auto ancillary stocks, whether it's Subros, Minda Corp, a couple of other names as well. So, where are we in terms of a cycle? We've got quite a few managements who joined us during the week, and they expect this chip shortage issue to play out. Some of them state that yes, input costs are spiking up, but demand is very good. So your take on the sector, and in the sector, what space will you be positive on? Go ahead.
Sure. So overall, we are positive on auto sector. As you pointed out, I think demand is fairly decent. The chip shortage is a short-term phenomenon, short-term aberration that will get corrected. It is already, according to me, it is done. As you also mentioned, most of the managements are saying the worst is already behind us. So from here onwards, we are actually seeing month-on-month improvement in production and chip availability. So I think that's history. Coming to the second part, so we are positive on domestic auto, and I think more positive on overall auto space. I think we are, as you can rightly see, we are playing more through auto ancillaries. So here, the moment we are buying auto ancillaries, we are not betting on which brand, which particular product will do well. We are saying that overall, irrespective of which company does well, the auto ancillaries which are supplying equipment to these companies would benefit. So we are betting more on that trend rather than trying to bet a particular model or particular brand do well within the auto space.
Right, Srinivas. Thanks a lot for joining in, giving us your time and advice. We will monitor this as it goes. Importantly, the kind of auto ancillaries that you are in, let's see whether they also, sustain well in the EV environment or not, is something that we will keep an eye out on. With that, what we'll do is take a short break.